Well, holy smokes, tomorrow is Fed Day. The Atlanta Fed real GDP now indicator now sitting, folks, at 3%. This is still, at least based on current data, a yes, slowing economy, but at least based on the data, it is still strong. So what are my final predictions for what the Federal Reserve is going to do tomorrow? These are my final thoughts, so we're gonna number them out. Number one, I think we get a 50. I'm basing that on Dudley and former Fed folks, and of course, Nick T. Number two, I think we're going to get a Powell who acknowledges, and you might disagree with this, but who acknowledges that no, we're not in a recession right now, but data has weakened enough, we just don't want it to weaken more. And that's why we're going 50, because things are good, things are strong, but we don't want to become complacent. That's prediction number two. Prediction number three is that barring any changes in the data coming up forward, the summary of economic projections now going forward is probably going to forecast that while we may start with a 50, we're going to go down to 25s. And we might take that process slowly while we're data dependent. Now, prediction number four is that stocks actually, which we've started to see a little bit midday through trading here already on the day before the Fed presser, might actually start taking some profits. That is, you might see a little bit of red and selling pressure. Why? Well, because look at it. You got a GDP at 3%. People were worried about recession, but the S&P 500 just hit all-time highs, not because of Nvidia pulling up, but because everything else is pulling up. So the market's actually doing really well. The question then is, okay, cool, if we're gonna be data dependent and that data is still a month away, is it potentially a time to take profits? Well, for hedge funds and shorter term traders, maybe. For long-term investors, it's always hard to bet against Trade America for the very, very long term. But prediction number four is that yes, we get a unanimous decision from the Fed. I actually think that Powell will probably convince everybody at the Fed to go with 50, and in doing so, will promise them that he'll acknowledge that, don't worry, we're gonna make it clear that the economy is still strong, which does create inflation risks, which might mean we have to even skip a meeting. Now that might not be as ideal, so you might get a lot of whipsawing in the markets tomorrow. See, if Jerome Powell pulls an ECB, which is part of my prediction number four, is Powell might pull an ECB. He might say, look, we're going 50 now, but that doesn't necessarily mean we'll have any rate cut at the next meeting. We're going to be data dependent, and it's possible that at the next meeting we'll do 0. It's possible we do 50. It's possible we do 25. And leaving that door open to a potential 0 at the next meeting isn't going to be too enthusiastic. And so I think there's a potential you could continue to see some profit taking. Now that is for both bonds and stocks, because bonds have been rallying and stocks have been rallying. I mean, some of the positions that I've been placing multi-million-dollar bets on, they're up like 200 to 300. Some of them, I mean, in total, probably somewhere around like 400K. Some of these big trades that I've been making here, and we've been talking about in the course of Member Lives, they're pretty nicely up in just the last few weeks. And this is fantastic, but it's probably going to lead to some profit taking. The real question for markets then is, how much profit taking is there going to be between the Fed meeting and the election? Because if you have too much profit taking, you don't want to trigger a recession. Which could happen if stocks fall too much and then you get more layoffs. Now, I do think Jay Powell is aware of this. So because Jay Powell is aware of this, he's probably going to err on the side of trying to push markets up rather than down, but he doesn't know the answers. And I think, as usual, the market thinks Jay Powell has all the answers. Hello, wow, this truck, oh, that guy's like texting. Here I am talking about the guy texting, but at least I'm paying attention. See, I'm hands-free filming a video. That guy ain't paying attention. He just came like flying into my lane. Tesla didn't move at all. Quick note on Tesla, it looks like they came out with FSD on the Cybertruck today. At least I got the update pushed here that says 12521 includes FSD for Cybertruck, which is great, finally. But yeah, you still got to pay attention to this stuff. But anyway, so folks, obviously we know we're going into election volatility here. Personally, I don't want to see a recession. I hope everybody can win And really, I just want to, after the election, just see markets go straight up. That would be great because it just helps every startup. It helps House Hack. It helps Stock Hack. Remember, we're launching financial advice within the next couple weeks here. Probably going to go in order of the folks who have applied. So if you haven't put your information in yet over at Stock Hack and you're interested, remember, you can always give it a try. If you don't like it, you can cancel. It's like a 30-day cancel window, so you can pretty much cancel at any point. Check that out over at stockhack.com. But those are my 4 big predictions on JPOW. So this, going in reverse order, this potential that we actually get a forecast of, I don't know, we might not need any more cuts. The economy is so strong. That one might take some people by surprise, and it could accelerate some of that profit taking. Now, am I going shorts or puts to go into this? No way, man. I have no idea. This one's gonna be way too volatile. If I was gonna trade, what I might do is I might send a trade between when the summary of economic projections and the rate decision comes out and when JPOW goes to talk. Because I do think if you get 50 and kind of a dovish summary of economic projections, JPOW might talk up how strong things are in the economy right now and how good the chances are for a soft landing. But that opens that door to him pulling that ECB. I don't know if we're going to cut rates at all in the November meeting. And that's going to be a little depressing to markets, both bonds and stocks. Now, I'm not, running for cover on that. Like, I've got some positions in bonds. Am I like, oh, I want to sell out of all bonds? No, I actually think, the pain that you might see in the stock market, if he does that, will end up turning into lower yields because, again, now you're pricing in more recession risk. But really, if we can just get through the next October, November, December, so 3 months, if we can get through the next 3 months of no recession, really, frankly, no recessionary data between now and the election, and then get through a good Black Friday, we might actually be able to dodge a recession. Who knows? But that's what I've been positioning for really since July. Nothing's changed. It'll be like, flip-flop again. And it's like, nah, my position hasn't changed at all since July. It's been Nike swoosh since November of 2022. In July, it went, I'm going to go short-term bearish until the election. We'll see. But it's just a hedge. Anyway, those are my quick thoughts. Look, we didn't even make it to 8 minutes to throw an ad in there. Not personalized financial advice. We'll see you in the next one. Goodbye and good luck.